Time now for a look at the day's top business news. France 24 business editor Brian Quinn joins me here on the set. Morning to you, Brian. Beginning in Italy, where Giuseppe Conte returning to his post as prime minister. He had stepped down a few days ago. This time, he's the head of a new coalition trying to figure out who will take what post and the economic challenges his country faces.
That's right. As Conte begins forming that government, it's safe to say those economic challenges are significant. A decade on from the global financial crisis, Italy's economy remains smaller than it was before 2008. The Eurozone's third largest, it is once again in recession as Conte looks to get it back on track. Colin Kinneborough reports.
The third largest economy in the Eurozone is on hold, with a growth rate of 0 in the first half of this year. Youth unemployment climbs upwards of 30%, roughly double the European average. Trade tensions between the United States and China have been a further drag, hitting Italy's industrial north, which is heavily dependent on exports. In the south, a lack of jobs and strained infrastructure have pushed tens of thousands of people away. The country also faces significant debt. At 134% of GDP, it has the second highest rate in the Eurozone after Greece. The first test for Giuseppe Conte's government, then, will be the vote on Italy's 2020 budget, a vote that Brussels will be watching closely.
We're just a few weeks ahead of the parliamentary session for the budget. We must start working on a budget law that can avoid the VAT increase, that will protect savings, and that can guarantee growth and social development.
Rome's hands are already tied when it comes to finances. Last December, Conte's government narrowly avoided EU sanctions with a last-minute budget agreement, promising to bring down deficits. If Italy's deficit exceeds its target of just over 2%, a safeguard clause will kick in, raising sales taxes. This leaves Conte's government without much room for maneuver as it works to put the economy back on track. The government reshuffle may well send Conte back to Brussels to negotiate for more flexibility. Whether EU officials will be more receptive to his new pro-European coalition is an open question.
Well, next, it looks like the U.S. and China are getting back to the negotiating table amid their ongoing trade war.
Well, face-to-face talks between the two sides set to resume in September after a sharp escalation of that conflict over the summer. The U.S. will begin collecting tariffs on over $125 billion in Chinese imports as of Sunday. Last week, Donald Trump said he was planning to hike existing and planned tariffs on $550 billion in Chinese goods coming into the U.S. by an additional 5%. China, for its part, cheered markets Thursday by hinting that it won't immediately retaliate against Trump's latest escalation. Take a listen.
China has sufficient countermeasures, but under the current circumstance, we believe the issues we should discuss are to cancel the additional tariffs on $550 billion of Chinese goods and guard against a continuing escalation of a trade war. The Chinese side is lodging solemn representation with the United States on this matter.
Last day of the trading week, how are the markets looking?
Well, U.S. indexes jumped on hopes of that non-escalation in the trade war. Dow ending Thursday up over 300 points. Asian indexes mostly following that trend in Friday's session. Industrials and chip makers leading the way in Tokyo and Seoul. The Nikkei up around 1.2%. Kospi up over 1.8%. Chinese indexes mixed as Beijing moves to focus on its domestic economy over exports. Hong Kong's Hang Seng up just over 0.25%. The Shanghai Composite just below the flat line.
Next, Argentina's move yesterday to delay repayment on its government debt is taking a toll on the country's bond market.
Standard & Poor's has downgraded Argentina's credit rating 3 notches to CCC. This after Thursday's announcement that the country will seek to restructure $101 billion worth of government debt. Argentina's markets and its peso have fallen sharply since President Mauricio Macri lost a primary election to center-left challenger Alberto Fernandez in August. Macri says it's his responsibility to avoid a default on the country's debt, come what may, in October's presidential vote. Here he is.
We took charge of the debt issue to defend the exchange rate stability in the short, medium, and long term, and we will work, as we have always done, without speculating. I have never speculated. That means not kicking the problems forward.
And finally, from you, Brian, Brazil's response to fires raging in the Amazon rainforest has drawn backlash from international businesses.
That's right. Well, a major U.S. shoemaker now says it will no longer buy Brazilian leather. VF Corp owns the brands Timberland and the North Face, among others. It says it won't go back to Brazilian suppliers until it's confident their materials aren't contributing to environmental harm in the country. Leather, of course, largely a byproduct of the beef industry, and ranchers clearing land for cattle is one of the primary causes of those recent fires in the Amazon. Elsewhere, Norway's asking its companies to make sure they're not contributing to Amazon deforestation. Finland, as well, has suggested banning imports of Brazilian beef to the EU over those fires, seeing some backlash against that Mercosur trade agreement recently signed, not yet ratified, between the EU and Brazil. So we'll see what happens there, Will.
Indeed, I think all the political talking will be going on behind closed doors for a while to come. Thanks, Brian. Brian Quinn with a look at the day's business.